Something is happening in Toronto's real estate market. Prices in the city are slipping, inventory is stacking up, and buyers who walked away 6 months ago are quietly returning to the market. But here's the real concern. The data we're seeing this October isn't just another seasonal dip. It looks like the early stages of a major shift. If you own a property in Toronto or thinking about buying or selling, this update matters. And if you don't understand what's changing, you could make the wrong move at exactly the wrong time. So let's break it down what exactly is happening, why it's happening, and the two takeaways for buyers and sellers. Let's start with the hard numbers for the City of Toronto in October 2025. According to the Toronto Regional Real Estate Board, the data for this month are the following. Total sales for the whole region, so this is the Greater Toronto Area, month over month went up. So in September of 2025, the sales were 55.92, and October 2025 sales were 61.38. However, October to October, sales were down from the 66.58 that we saw in October 2024. On the pricing front, the average price in the Greater Toronto Area was $1,054,000, down 7.2% from October 2024. For the City of Toronto, sales were still down from 2509 to 2351, October 24 to October 25. Now, for this again, for the city alone, detached is down 9.1%, semi-detached is down 6.9%, and condos are down 2.7%. For the City of Toronto, the detached average price is down 9.1%, semi-detached is down 6.9%, and condos are down 2.7%. With respect to the months of inventory, detached is sitting at 3.87 months, which is very close to a balanced market. Semi-detached is at 2.16 months of inventory, which is in seller's territory, and condos are at 5.39 months, giving buyers lots of options and negotiation leverage. In summary, there are micro markets where demand and supply and days on market are very different from one pocket to another. This is within the City of Toronto. Also, this year we will be breaking the sales record for the wrong reasons, that is, as it would likely be the slowest sales in over 12 years. Why do I see a big change might be coming? Because when I look at the data, I see the following three items. First, price declines across the board. In the City of Toronto, we're seeing prices down across detached, semi-detached, and condos. Buyers have more leverage than they've had in many years. The second point is rising supply and stagnant demand. Active listings are up and sales are down in the city compared to last year, which has increased the months of inventory from 3.8 to 4.8 months when you take into account detached, semi-detached, as well as condos in the City of Toronto. The third observation is more time for decisions and less panic over price hikes. The average days on markets went up from 42 to 47. And while homes are still selling in the city, the pace is slower. Sellers who were used to receiving multiple offers within days are finding they need to be more competitive and patient. Question is, when will buyers come back? Hint, it's not interest rates. Let's break it down by property type within the City of Toronto so you can see where opportunities and risks are concentrated. For detached homes, in October 2025, the average sold price was 1.619 million, which represents a year over year, so from October 2024 to October 2025, a decline of 9.1%. For semi-detached properties, the average is 1.219 million, down 6.9 when you compare it year to year. And for condos, the average price in the 416 is around 699 and down 2.1%. However, I see more risk or downward pressure in the condo market because There is a lot of active listings on the market, as well as record completions this year and next year. So there's a lot of supply that is currently available for sale, and more supply will be coming in 2026. So until the supply of condos for sale gets absorbed, which will take a couple more years, I see further downward pressure on condos. And once that supply is absorbed, then prices will stabilize and trend upwards moving into future years. Why is this happening? There are several macro and local drivers behind the shift. Psychology and confidence. Many potential buyers are sitting on the sidelines waiting for the market to bottom. When you combine buyers sitting on the sidelines with higher inventory, you get a slowdown. The city has more listings than typical for this time of year, which changes the dynamic from fear of missing out to taking your time and picking opportunities. There's a shift in buyers' priorities. In the past years, many buyers rushed to lock value. Now we see more buyers waiting, more conditional offers, more price negotiations. That means sellers need to compete for buyers, completely the opposite of what was normal a few years back. In effect, the market that has rewarded speed has now evolved into rewarding patience and strategy. What could this mean moving forward? Here are two possible scenarios. First, a gradual balance. The market continues towards a balanced state. The months of inventories will be around 4 to 6 months, moderate price declines that flatten out, and buyers having more negotiation room. This is the most likely path if rates hold steady and the economy remains stable. The second scenario is a further decline. If trade negotiations do not materialize into something positive in 2026, employment weakens, the market could tip further towards buyer's territory, which will mean more price drops, longer days on market, and stronger incentives by sellers. For the city of Toronto, for detached and semi-detached, I lean towards the first scenario, where gradual move towards a balanced market. For the condo market, I believe there is, like I mentioned earlier, a bit more pain to come. And until that supply of resale condos and newly completed projects is absorbed, there will be further downward pressure. It might be another year or two to see condo values stabilize, and then they will increase after that. So is this the big change in Toronto real estate market? It is. We moved from a seller-dominated market into one that is more balanced, and in certain sectors, such as condos, a very strong buyer's territory. Here are the takeaways in this environment. For sellers, price to sell, not to test the market, but price it to drive traffic into the property, generate interest, which will lead into offers and shorter days on the market to get your property sold. The property needs to be exceptionally staged and 10 out of 10 condition, which means fixing all the small things buyers can pick on. With respect to buyers, get your financing lined up, know your must-haves versus nice-to-haves, and move when you find an opportunity that checks off a lot of boxes. With more choices, there is value, but you still need to act. I'll be posting further analysis each month to help you stay ahead. I hope you found this update helpful. Thanks for watching, and I'll see you in the next one.